It's an interesting community joke that technical analysis is basically astrology, yet a lot of people who know what they are doing use it. First, let's look at the least credible branch of technical analysis. Different kinds of chart patterns and indicators. You have all seen them, and you have all heard people trying to tell you they can teach you how to use them to get rich. I legitimately could not find one backtest to suggest that any of these indicators are able to outperform over the long term. Not one. This is the least respected branch of technical analysis. It's what course sellers use, and it's what beginners push onto other beginners. It's not about these patterns not existing. It's that they don't yield as a result consistent enough to make money on. There are strategies that have managed to beat the market over the certain periods. Of course, there will be always some instances of these kinds of indicator-based systems working. The only downside is that a lot of these algorithms can have several years of meager or negative returns. This brings up the second problem, which is the most of us do trading as income. If market sentiment changes and renders a technical analysis strategy useless, then that's a problem most of us can't afford. We can't have one prosperous year followed by a year of losing money unless you made a ton of money during the first year. It would be impossible to know in real time whether you should up the capital or not based on which type of year or month it's going to be. Technical analysis patterns used by themselves are not going to flip the consistent profitability switch. Support and resistance should be the main focus, particularly for beginner traders who are trying to figure out what works. It's simple and is a great tool for trying to understand structure and movements. I remember learning about every indicator and writing papers on each one to figure out how to use them in the beginning. For each new indicator I found, I was like, oh, this is the one. And I'm sure many of you can relate to that. Like if you did. When you objectively test it to see if it works using the scientific method rather than emotions, they just don't work. From all the backtesting data I've seen, it seems like there is little evidence to suggest that technical indicators have any long-term predictive power when used by themselves. Understanding support, resistance, volume, and momentum can definitely help you gauge market sentiment in a more quantitative manner. These ideas reinforce the notion of technical analysis being a good tool to help you understand the story that price action is telling. It helps us understand what has already happened, but that's different from using shapes to make money. Also, technical analysis is really just a loose term that means finding patterns in data. Some of the greatest funds have generated impressive returns purely from looking at patterns and data. However, comparing simplistic chart patterns to advanced mathematical and scientific methods is like comparing a spoon to an airplane. Both are tools that deliver something. One delivers food and one delivers people and cargo. Drawing polygons on the price chart is not the same as sophisticated team working together to find correlations and data using advanced techniques. So what's the moral of the story? Time in the markets is what makes people successful traders, not necessarily the shapes and patterns that they use. Memorizing candlestick pattern and other very simple technical analysis shapes can be a waste of time. Of course, there is some validity to technical analysis, but there is a lot of information that leads beginners astray. This information is often pushed by people selling courses and the ones who share images of very basic charts and shapes. If the shapes were what gave people an edge, this could be coded very simply to give someone a profitable algorithm. But it doesn't. No. It's missing the experience of a trader who intuitively has a good idea of whether or not the price action idea will work based on information that can be quantified. If an expert trader and I saw a common pattern on a chart, I might lose money on the trade and they might make money. This is because it's not the shape, it's the difference in our experience and our understanding of price action. I think as traders get more experience, they attribute their success too much to technical analysis when really it's because of them. Using price structure for stops and targets is great. Just be aware that the human brain is constantly searching for patterns even when they don't exist. If the little pattern we do see were actually there with any degree of significance or reliability, then we could call it. You will be successful not because of basic patterns, but because of your experience and hard work. I think long-time traders don't give themselves the credit they deserve. I'm certainly not anti-technical analysis, but I wanted people to understand how the mind works by showing them how we see patterns that don't exist. I wanted them to understand that they shouldn't waste their time with technical analysis, pattern charts, and other bogus methods. Technical analysis is great because it makes us look at how price moves, and the more time we spend with price action, the more it becomes a type of language that we speak. Indicators are only tools that help to tell the story that is already there. Tell me what you think of technical analysis, and if you have used it, how is your progress? Please answer honestly. We can have a really cool discussion. Besides that, guys, I thank you for watching this video until the end. Don't forget to subscribe to this channel, hit that notification button, share this video with your friends, and till the next time, guys. Bye.